Hey guys, there is a big problem going on right now with the US housing market that I just don't think a lot of people are paying attention to. And I've been tracking this for a while, but I came across an article the other day by Realtor.com that really shed some light on a topic that I really want to get out in front of people to understand what's happening right now. So the issue is we have a rising population. We have an inventory level across the country, including here in Charlotte, that is extremely low. And at the same time, new home builders are pulling back on new construction starts. So what is that doing? That's causing a gap between the amount of households that are being formed across the country versus the amount of homes for sale. And guys, if we don't get this problem fixed fast, it is going to be very, very hard to bridge the gap that I'm about to show you. So what exactly am I talking about? Well, that's a fantastic question because I'm going to dive right in here to this article from Realtor.com and we're going to talk about it in detail. So the article here is talking about U.S. housing supply continues to lag household formations. Multifamily construction offers alternatives. So let's see what's going on here. It says affordability struggles cool the housing market. It says in the second half of 2021, single-family homes were both being started and completed at the fastest pace in the last decade. Early 2022 continued the previous year's trend until the middle part of the year when the market felt the impact of the ascent of mortgage rates. In response, red-hot buyer demand cooled and builders started to pull back on single-family home starts. And that's exactly what we're showing you here from Fed economic data. So Fed means Federal Reserve economic data, just a little tip of the day there. So if we go back here to January of 2021, we can see that there was 1.1 million new home starts. And as we follow the trend line through 2021, all of that looks reasonably well. Every mark right here is above over a million per month in new home starts. But as we start to get over here into the 2022 mark, especially in February, that is when we hit somewhat of a peak at 1.2 million home starts, but that's also the point in time when interest rates ever so slightly started to rise, and a lot of people were feeling that interest rates were going to go up, especially the builders. So what did they do? They kind of freaked out, right? They don't want to be building a bunch of inventory if there's no one there to buy it. So what did they do? They stopped getting new home starts. And as you can see, as we go down through 2022, we get down here to July of 2022 at 900,000 home starts, but oh, wait a minute, it gets worse. As we head over here and we get to the month of November, we're only at 807,000 home starts. We did pick up a little bit of pace in December, but as you can see, going into January of 2023, we're declining again. So we're gonna have to see what happens, but this is part of the problem right now that I was talking to you about. Picking back up, it says builder confidence fell slowly in the beginning of the year before dropping off more dramatically in May and continuing to fall all the way to an index of 31 in December of 2022, which was the lowest level since June of 2012. So looking at some information for that index from Mortgage News Daily, as we just talked about, builders at this point in time are freaking out. They're not having a lot of new home starts. Their confidence level is starting to plummet. But let's go back over to, this is the February of 2020 number. I want to take you back a couple years and just show you exactly how we're trending here. So in January of 2020, the index sat at 75. As we all know, this right here is the COVID point in time when COVID became the thing everyone was trying to figure out. Builder confidence fell all the way down to 30. It didn't take us long to figure out kind of what was going on. And this is when the market started to take off, right? Interest rates fell to all-time lows. New construction builders were hyped up and ready to roll. And you can see builder confidence got up to a 90 in November of 2020. And they kept things kind of even keel here as we kind of cruise down through here through 2021. Starting to get into the months of 2022. And wait a minute, hold on a second, there's February again. That's when interest rates started rising again, right? So naturally, as these builders are feeling the impacts that interest rates are going to have, as the home starts declined, so did the builder confidence. And this is what it's showing you here. So in the builder confidence number, just to let you know, anything over 50 is considered positive, anything under 50 is considered negative. So as I just mentioned, we were at a number of 90 back in November of 2020. As we cruise on over here to the end of December, this number here sits at 31, which was just talked about in that article. And it says, as construction activity slowed, household formations continued to climb, reaching the highest number of total households in U.S. history in December of 2022, with over 2 million new households added in the course of just a year. And if we go back and look at the Fred data, you can see in December of 2021, there was 127,549 million houses that were being formed at that point in time. But look at this. You're going from 127 million all the way through 2022. Let's fast forward till we get right over here to the end. Look at that peak right here. That's a lot of households being formed. And we ended in 2022 at 129.6 million. If we take that number and subtract it from the 127,549 at the beginning of the year, that's where that 2 million improvement came from that we just heard about in the article. And in response to that, builders pivoted towards multifamily housing as the rental market remained profitable, with nationwide rent hitting an all-time high. Housing construction of buildings with 2 or more units was 29.6% of all housing starts in 2021 and grew to 35.1% by the end of 2022. It says in January of 2023, even as multifamily housing starts slowed down a little bit, a record high of 932,000 multifamily housing units were under construction. So guys, let me set the stage here for the rest of our conversation today, right? So to recap of what I just told you, we have builder confidence numbers at almost all-time lows. We have single family home new starts at almost all-time lows. And we have housing inventory at almost all-time lows. And we have new household formations at record-breaking paces. So here's where things get really interesting. It says, despite multifamily construction, the housing supply gap widens. As household formations outpaced housing starts in 2022, the gap between total housing starts and household formations widened from 1.8 million housing units between 2012 and 2021 to 2.3 million units at the end of 2022. The gap between the single-family housing starts and household formations grew from 5.5 million at the end of 2021 to 6.5 million at the end of 2022 as household formations picked up significant steam and single-family home construction waned. So in just 1 year, the gap between single-family home starts and household formations has increased by 1 million, guys. That is a big number in just 1 year. And guys, talking about multifamily housing, I would say really about 50% of new construction over the last 2 years in Charlotte, the new construction builders are pushing more towards the condos and the townhomes, which plays right into this article, right? I think a lot of builders are realizing that they can buy land, they can kind of have a win-win situation, right? They buy, I don't know, a big tract of land, they can put more housing units on that land if they build condos and townhomes, and at the same time is providing more housing units overall. But I want to show you on a graph exactly where these gaps are right now. So here's a chart provided to us by Realtor.com. You can see the title of it. It says cumulative shortage of new homes from 2012 to 2022. This red line is showing the deficit of single family homes and multifamily homes together. It's showing a 2.2 million unit deficit. And then this line here in blue, this is for the single family only. And that is showing us a 6.5 million unit deficit. Now let's go and break into another chart that I want to show you as well. And guys, here is another chart that's going to make this a little bit more visual for you. So the blue line here is the yearly household formations. And as you can see, this is rising at a pretty substantial clip. The line in red is the yearly total home starts. And that line right there is falling. Just to be clear on this, down here in the gray line, this is the yearly multifamily starts. So that is obviously well below, because single family is of course higher than that. But what you can see right here is this gap between the household formations and the single family home starts. They're going in the opposite direction, guys. This is why we've got to get this under control, or this gap is going to continue to get wider. But the problem all really didn't start right now. I want to take you back to the great financial crisis and show you exactly what really started the problem that we're in right now. So if we go back in time and take a look at this chart, this is showing us the single family housing units that were completed every year from 1970 through 2000 and essentially 22, okay? There's a line that goes down the middle there. It says average annual units completed. Okay, so going back over to 1970 till about 2004, you can see that almost every year was above this line right here. So all of that was pretty good. That means that we were building enough houses to keep up with demand, okay? And the green bars right here, that was the boom here in the early 2000s when the housing market took off. During those years, prices went up substantially. And then you all remember what happened right here, which was about 2008. That is when the financial crisis happened in that time frame. And as you can see in the red, we went 14 straight years that we did not build enough houses to keep up with demand in the United States. And during those years, the same thing was happening that's almost happening now, right? The market crashed. Builders were not going to get housing starts. They were not going to build inventory. They were not going to build anything that wasn't going to sell, because during those years, the 2009 through 2012, it didn't seem like anybody was buying houses. So with them pulling back on their new construction starts and not building anything, that is really what started this decrease in the amount of supply. And we have just been trying to claw our way out of that ever since that 2008 timeframe. So that goes back to the question, right? What is it going to take to bridge this gap? And are we even going to be able to do that? Well, let's see what the article has to say. So there's our question. What will it take to close the gap? It says this year's pickup in household formation combined with the slowdown in housing starts mean that if building and household formations continue at this clip, the gap between these metrics would never close. It goes on to say that the single-family housing supply gap reached 6.5 million homes by the end of 2022. We just talked about that. However, this figure overstates the housing shortage, as new multifamily homes offer options to buyers and renters. However, though multifamily housing is poised to offer more inventory, taking some pressure off of home and rental prices, these homes take an average of 15 months to complete. And this is important right here. Therefore, the impact of these housing starts won't be fully realized until late 2023 and into 2024. Finally, it says, if only single-family homes are considered, the rate of housing starts would need to triple to keep up with demand and close the existing $6.5 million home gap in 3 to 4 years. However, if the rate of total, that's multi and single-family housing starts, increased by 50%, from the 2022 rate to an annual average rate of 2.3 million housing starts per year, which is a pace of construction on par with what we saw in the early 1970s, and some of the peak months for building in the mid-2000s, it would take between 2 and 3 years to close the existing $2.3 million home gap. That is, of course, assuming the 2012 to 2019 average rate of household formations, which was approximately 1.3 million households per year. Now, guys, to me, that seems a little bit far-fetched, right? We're saying we can close this gap if we average around 1.3 million household formations per year. We just saw that in last year alone, we were at 2 million household formations. So unless that number drastically decreases, it is going to take a long time to get back to a market where we have neutrality in demand and we have enough inventory to satisfy everybody. So I think we are going to be sitting in this low inventory situation for a very long time until we can get to a point where we're not. But we need new home builders to be building more houses. We need sellers to be putting more houses on the market. And you know as well as I know, that is not really going to change until interest rates come down and a lot of these sellers on the existing side feel comfortable enough to sell, to trade in their 3% fixed rate for a nice 7% rate. It just does not make sense. We've talked about that a bunch. And that leads me to another topic of affordability, right? Affordability out there is been talked about forever with rising rates and rising home prices. Here's an interesting fact that came right from this article as well. It says affordable for sale inventory continues to fall. Check this out. New residential construction data shows that a rapidly decreasing proportion of new homes are affordable, meaning less than $300,000 sales prices. In 2019, in the Q4 of that year, 41% of new homes constructed were sold for less than $300,000. In 2020, that proportion dropped to 31%, and in 2020, only 14% of homes constructed were sold for less than $300,000. But by Q4 of 2022, that number dropped to just 10% of new homes were priced under $300,000. It goes on to say that these higher rates in home prices have increased the monthly cost of financing 80% of the typical home by nearly $650 per month compared to a year ago in January of 2023, which leads me over to interest rates. Today's 30-year fixed rate sits at 6.75%. 1 year ago, that interest rate was at 4.41%. That is an increase of 2.34% year over year. So what impact does that have on someone's mortgage payment? Well, let's take a look. Based upon this mortgage calculator, if you're going to purchase a home at $450,000, you were going to put down 5%, you would have a loan amount of $427,500. At today's interest rate at 6.75%, you would have a monthly principal and interest payment of $2,772. This does not include taxes or insurance. This is just straight up principal and interest. For the sake of comparison, we're going to leave it at that. Taxes and insurance can change. So $2,772 as of today. Keeping all of those other variables the same, the only thing changing is the rate that it was a year ago today at 4.41%. That payment would be $2,143. The difference between $2,143 and the $2,772 is $629 per month more you're paying right now than you would have a year ago. So guys, we can only hope that these interest rates start to fall. So guys, drop a comment below if there's anything in this article here in this video that you got any good value out of. Comment below and let me know if you've thought about this before or if this is something new to you. I would love to hear what you have to say. And guys, if you liked the video, give it a thumbs up and don't forget to subscribe to the channel. I don't want you to miss out on any of the new videos I put out every single week. I do my best to find things that are going to bring value to you guys and to give you something to think about that's happening here in the real estate market, not only on a national level, but a lot of what I talk about here is also on a Charlotte level. And guys, if you guys need my help in your home search, I'm very easy to get a hold of. Scan that QR code. That'll take you right to my calendar. You can set up 15 or 30 minutes with me. Let's meet online on Zoom, talk about your situation and how I can help you. And all of my contact information is in the description below, as well as a separate link right there to that calendar. So guys, that's all I've got for you today. I really appreciate you tuning into this video, and keep close to the channel because I've got a lot of cool stuff I'm bringing to you down the road. If you want to watch another video that I did, I just put out a video about Charlotte home investors that are exiting the market. A lot of people are glad to see them leave, so you may want to check out that one as well, guys. So thanks again for watching, and as always, make it a great day.